G'day taxpayers. RBA Governor Michele Bullock just gave a speech to the Anika Foundation discussing the dual mandate of the RBA, that is keeping inflation in the 2 to 3 target band, midpoint 2.5%, and keeping the labour market at full employment, which is something that doesn't have a figure attached to it, but something that makes reference to the fact that whoever needs a job can find a job in very broad terms. Now, the context for the speech was the fact that the unemployment rate, the numbers that came out recently, is at a 3.5-year high. The trimmed mean inflation rate, to the extent that that matters, is at a 3.5-year low. So we've got this interesting dynamic unfolding on the dual mandate of the RBA. But alas, the RBA governor sort of downplayed the importance of monthly labour force numbers, claiming that they've got the quarterly figure right, so that's okay, that the momentum through the quarter from 4.1 to 4.3 as we head into the September quarter next month is nothing particularly to worry about from what she implied. And as we noted earlier, that she's sort of downplayed the importance of the monthly inflation numbers for some reason, even though we look at the last few years and the figures on the headline and even the trimmed mean monthly and quarterly basically line up with a very, very, very small deviation. So no real guidance there. She's sort of really in the sense looking backward at why they were hiking rates a few years ago, the inflation problem of a few years ago, and really not throwing forward to what are the risks of the labour market being weaker than they're currently forecasting, inflation lower than they're currently forecast. So in a sense, it just confirms what I suspect the RBA is doing, and that is being very reactive to news, not preemptive, to try to guard against unemployment becoming too high, inflation becoming too low, and therefore missing at least one, if not both, of their mandated requirements. So, onward and upward.